So hi everyone, the candlestick pattern you're seeing on your chart right now is what we call the bearish kicker right here, and the opposite is the bullish kickers. So a bearish kicker is also known as a bearish professional gap, and the gap you're seeing right here is what we call the kicker. So in this video, we are going to be studying these kickers more in detail, okay? So this video explains everything you need to know about the kickers. So we continue. So a kicker is also known as a professional gap, and it occurs when the following conditions are met. Number one, the price is supposed to be in a trend. And then two, suddenly a gap appears in the chart. A gap is defined when when the open price of one candle is not equal to the close price of the candle that precedes it. Therefore, a gap in the price movement. So the gap is in the opposite direction of the trend. And if the price, for example, rose from 3 to 10 and then opened the next day at 8, it would signal a bearish kicker. Okay? And therefore a good signal that the bears have taken control. A kicker signal can be very powerful, saying that a trend is reversing, and it is often interpreted as that professional investors have quickly realized that the trend is over and therefore running out. Okay, so this is a signal that shows that there is going to be a rapid reversal within the current trend. Okay. So on this chart, we are going to be looking at the bearish kicker and then see its entry points and its exit points. But once again, to recap, I have said that in a kicker, the price, number one, we have to form a trend. Okay. For example, we are in a clear downtrend. And then what happens that within this uptrend, downtrend, is that we get a gap which is in opposite direction of the trend. For example, here the trend is down, but we get a gap going upwards. So this gap going upwards is what we call the bullish kicker. And when we see this bullish kicker, it means that there is going to be a rapid reversal from the downtrend into an uptrend, okay? And the reverse is true for the bearish kickers. So for the bearish kickers, you can see that we have a clear uptrend, okay? After this clear uptrend, we get a gap which is in opposite direction of this uptrend, and therefore the gap here would be a gap down. Okay, so for example here, if the price is moving from let me say 13 bucks and then it rose to 40 bucks, okay, so if the previous candle closed at $40, we expect the candle which is coming next to also open at 40 and then maybe close lower or close higher. Okay, but what happens in kickers is that instead of the price opening at the $40, it is going to open lower than the $40. Let me say here it opens at $38. So what happens when it opens at $38, it creates a gap of $2. So this gap here is what we call the bearish kicker or a bearish professional gap. So what we expect is that due to this professional gap, in most cases, we shall find that the price is going to continue in the direction of this gap. And therefore, we form what we call a bearish kicker. Okay? So this bearish kicker is a strong signal, and it shows that the professionals have realized that this uptrend they have been riding is over, and therefore they are quickly taking profits. Due to this quick take of profits, what happens is that the market creates what we call a gap. Okay, so therefore we go down rapidly to create a new trend, and which is a downtrend, and therefore this is what we call a bearish kicker. So on this chart, we are going to be looking at the bearish kicker, where we can enter the bearish kicker from and where we can exit it from. Okay, so what happens under price action, those people who teach price action, is that due to this gap, okay, rapid price movement occurs, and therefore the market will come back later and then retest on that level whereby there was a gap, and therefore we could come down again. So this is what we shall study more in the professional videos to come. So right here, you can see that here we have a clear uptrend series of higher highs and then higher low patterns, okay? And you can see that all these previous candles, where one closes is where another one opens. So for example, here, this one opens here, then it closes here, and then this one opens at the close of the previous one, and then it increases, closes here. This one opens at the close of this one, and therefore it also increases. But when you look right here, we have what we call a gap. So what created the gap? You can see that here the price created a clear what? resistance, and the price is fighting to break the resistance, maybe retest and then continue upwards. But what happens is that on this resistance right here, you can see that we have this candle, which is a strong bullish candle. It closes here, but this one opens at its close and then it closes higher. Then this one opens at its close and then closes slightly lower. But you can see that this candle here, okay, this doji, it opened far from where the close of this previous candle was. So for example, here, if it was $10, you can see that here it opened at around $7 and then creating a gap. So this gap here is what we call the kicker, okay, or what we call the bearish professional gap, because it has occurred on an uptrend. So this gap here. So what do we do after seeing the gap? Should we come and go a short trade from here? No. What we do is that we wait for a clear confirmation candle which is bearish. Okay, so you can see that after here forming this gap, we caught indecision. These dojis, they indicate indecision. After the indecision, you can see that the bulls were trying to take over, and then after forming this clear bearish candle, which is a bearish engulfing, we can say that we could make our entry. So what happens after getting the gap? We wait for a confirmation candle, which is a clear bearish signal. Okay, so after getting this bearish candle, we could make our entry here. We don't buy at the market, we use the market orders. Here we make a sell stop order, and our stop loss is supposed to be above the kicker or 1.5 of the ATR, and then we could be able to catch profits from this level and then the next level of support. So that is how we enter the bearish kicker. Okay, number one is when you form the price is on a clear uptrend. Okay, the price creates a gap down. So this is our gap. After the gap down, we wait for a bearish confirmation candle, and on this bearish confirmation candle, we put our sell stop order, and then we put our sell stop order. Then stop loss is above the kicker, and then we can wait to catch the wave down. Okay, so that is the bearish kicker, and that is how it can be traded. So thank you so much for watching this video, and I'll see you in the next video. Do not forget to subscribe to the channel for support and for more videos like this. My name is Jordan. Bye bye.